Good morning, traders. This is Chris Buss with Traders Profit Compass with a morning look at markets for Thursday, September 3rd. Taking a quick look at futures here. Oil down 3%. It got clowned yesterday and this morning. So look for energy to be particularly weak. We've been losing ground all morning on ES, down about 0.5%. Gold down 0.5%, copper down 1.32%, NASDAQ futures down 1%, the Russell down the least, down 0.26. So setting up for a red morning across several most of the asset classes really. Taking a look at the indexes from yesterday, starting with the SPY 2-hour, you see we've been maintaining this nice uptrend channel. Earlier this week, we popped above the midpoint, which should now act as support. Hopefully, we will see price remain in the top half of this channel. But we did get what could be considered a touch yesterday and backing off. So today, as price pulls in, look for support around that midpoint. If we lose that and things, deteriorate further, we will probably come down here and touch the low side of the channel like we did back here. And then we've got to look for support around 351.50 and the uptrend line. That's your go, no-go level for folks on this time frame. Below 351.50, I would expect a quick touch down here of 348.50. And then, of course, things could accelerate to the downside if the channel breaks down and we lose this level of support. So keep your eyes focused on the midpoint and the low side of the channel to maintain our uptrend. Taking a closer look at the 30-minute chart, you can see we got really extended here. We put in this gravestone doji as the final candle of the day yesterday, which is, not inspiring at all. You don't want to see that. And now today, most likely we'll have a sizable red candle here, and then we'll have to see after that if things stabilize or if we pull back to this 355 first support, and then the opening from yesterday here just below 354. That's got to hold. For any trader on this time frame, yesterday's open needs to hold or this gap will fill, and then again we're back down in this 351.50 area, which as you just remembered on the 2-hour is where that lower channel comes in. So these are the lines to focus on this morning for short term: 355, the gap, and then 351.50. Yesterday, here was our open, that big pre-market push that we were hoping to hold for our short-term Apple and Netflix calls. They flushed that open and filled that gap. But the rest of the day had a nice recovery and recaptured most of that opening bar loss. I've dropped in an intermediate minor trend line here in dashed brown. Now this morning it looks like we're going to pierce that, and on the 2-hour time frame you want to hold this uptrend line that I've got penciled in off this swing low. So right in this 298 area, you want to see that hold, or the likelihood of coming back to 294 and possibly lower becomes greatly increased. So keep your eye focused on that uptrend line. If we zoom down into the 30-minute chart of Qs, Here's our uptrend line. Here's that final bar doji. We've got this persistent bearish divergences here. So these divergent highs are, I won't say problematic, but there's always this cloud of bearish divergences hanging over our heads that favor a pullback, but we just haven't seen that in price yet. So as price comes in this morning, we want to hold 300 in this uptrend line. If we can't hold it, then we're into yesterday's lows at 298. And if that doesn't hold, we're coming back down into these lower support areas where, you know, we'll either look for a bounce, or if they don't hold, if you're a short-term active trader, you can certainly try shorts as these levels break and pull back. IWM, really today, you saw in the futures, it's just down slightly. I think you got to hold 158 to keep the door open to 160. If you drop down below 158, probably coming back here to the 157.25 area to test. And then if that doesn't hold, we're back to that consolidation area where 156.75, 156.50 would be your support area. And then, of course, if that breaks, then you're looking back at 155. I don't expect all that to happen today, but you've got to have a downside scenario penciled into your mind if and when price moves in that direction. Know your support levels, know how you're going to play it, and then watch to see if price can hold this 158 and stabilize and keep that door open to 160 on the upside. TLT, we mentioned yesterday, has staged this nice recovery above 164.70 with equities being red today. Probably going to see a push higher towards this 167.25 area. If you're trading this or you've been positioned long, I think you're going to be in good shape as long as 164.70 holds. Gold has found support in this 181.75 area, put in a baby bounce, but we've seen dollar strength the last 2 or 3 sessions, and if the euro weakens and dollar either stays strong or gets stronger, gold is going to have a tough time. And if you're bullish, you don't want to see this 181.75 fail. Then you've got one final test down here at 180.50, the lows of several days ago. Or we're coming back to this 177. So this here, this was the fake out that many of us probably bought. I tried to buy it, got stopped out. So anyways, I don't like gold right here. It's a little bit too choppy. I don't have a clear signal, so I'm just going to let it go. I'd be taking a look at shorting it if it breaks this low here, 180.50, but I'm not going to mess with it right now otherwise. Same story with the miners. Here is the whipsaw breakout, came back down. Now it's back in this choppy area. Probably going to make a move back into this triangle, and I don't have a clear look at that right now, so I'm going to let that go. Moving on to FAANG quickly. We talked about this triangle yesterday. Several guys in the trading room got calls on this breakout here. The early morning candles pulled back in and then broke out again. And so that was a nice quick trade. If you were on your toes and you did, excuse me, you didn't give up on it in the morning, that was a nice trade. So it's going to be soggy today, I would imagine, with the Qs being down 1%. But if you're an active trader, yesterday, this was a nice signal on the breakout of the triangle. Apple disappointed us yesterday. We were looking great at 929, but 931. We lost a lot of our money in those 135 calls. No clear look here in the middle of the range with the Qs down. I haven't looked at Apple in particular, but I would expect that to be soggy. Quite a big level here at 128. Below 128, you're probably going to see this, these are obviously mismarked from before the split, but down here in the 124, 123 area would be support. Amazon did well yesterday. It held its 3,500 level. If you're long, you're fine as long as that holds, but I would be concerned on a break below 3,500 for Amazon. Microsoft, I got whipsawed right here. I had told you yesterday in the mid-session update that I bought this breakout. Came back, took out my stops, and then broke out again. Remember, we've talked about reclaiming a broken level from below is bullish. That gives you another buy signal. You know, we broke above, broke back below, and then recaptured. That would have been, it's not a lot of money, $1.50, $2. But as long as 230 holds, Microsoft is in good shape, above the old all-time highs. But I wouldn't be surprised today with a 1% pullback in the Qs if Microsoft didn't give that back this morning. Google was a big winner from yesterday. I mean, it never looked back. It never filled its gap and just kept going. Google is not one that I typically focus on just for my own personal trading, but that was a great trade when you saw big cap tech being really weak and Google holding the line. That was a phenomenal trade. What was that? 1660. That was $60. That was a great trade. You would have been very pleased with yesterday had you grabbed that. Intel was the one I was focused on this breakout into the big gap. We'll see if it holds today, but there was a lot of big money call buying in the name yesterday that I followed with price moving into the gap. And that's a point I want to make to you as I begin to share with you option order flow. Rarely will I find, or really will I follow, what I perceive to be big money order flow if the charts don't support it. I can't go out there and just follow some guy because he put $1 million on something. It's something to take note of. I put it on my radar screen, but I got to see the stock move in the right direction and break out from a technical level before I follow that particular trade. And so in this case, if I were to just see, and I have seen Intel order flow earlier in the week looking for upside move, but I needed to see it break into the gap. So that was my trigger. And then the institutional order flow is more or less a confirmation or gives me more confidence in a trade like that. So that gives you a little insight into how I look at the order flow. Twitter finally was our big winner yesterday, up over 6%. giving us a nice double on our position. As you'll see in the notes, I rolled up my September 41 calls, took that win off the table, staying long with 44.47 call spread for $1 for September expiration, looking for more upside, but taking the win to the bank and not risking it. Now today I saw that Twitter was down. If you rolled yesterday and you have a call spread, today you'll see those out of the money strikes that you sold lose a lot of value, and that would be a gain on your P&L. If it gets low enough, you can buy that back and keep the money, keep the gain. If you sold it for, I think it was 60 or 70 cents, those might be worth 30 today, so you can buy them back at half price. And then when the stock advances, hopefully, you can sell that upside call again for 60 or 70 cents and maintain your spread. I hope you understood that. Greg from the group brought Western Digital back into focus for me last night at our Ask Me Anything session, which went really well, and I appreciate everybody that attended. I look forward to doing more of those in the future. It's a good interaction, good chance to meet you and interact and answer your questions, and also for you guys to bring things to my attention that I had possibly overlooked. And Western Digital was a good example of that. This has a $5 gap to fill. I set an alarm at $39.50. We see the 50 EMA here also at the gap as resistance. If price can pop both the gap and this 50 EMA at $39.50, that might pan out to be a nice little trade for a potential gap fill. So thank you, Greg, for bringing that to my attention. Also in the written notes today, there was some significant call buying in TSM and QRVO, two semiconductor names. The semiconductor group is really starting to move. Greg actually pointed out last night that Hewlett-Packard had mentioned in some recent commentary that they can't keep up with PC demand. That's probably what's part of lifting Intel and the group in general. This stay-at-home, refurbish our tech. I need a new computer. I need a new monitor. I need a new phone. Continues to be strong and may continue to be, into the foreseeable future as new workflow, new work environment takes hold. So I want to keep an eye on semiconductors and some specific names that are making important technical moves. So, okay, let's wrap it up here. It's about 10 to 8. I'll get this video uploaded for you, and we'll see how the morning and the rest of the day breaks. Looks like it's going to start out to be pretty soggy, but as we've seen in the past, dip buyers have been conditioned almost robotically to buy the dip. So let's watch and see if that holds today. I've given you the key support levels to focus on today. And like I've said in the past, I'm really confident about my levels. I think it's something I do well and something that you can count on. So focus your attention on execution. I'll focus my efforts on giving you good setups, finding the proper levels, and I think that's a winning combination for both of us going forward. So, as always, if you like the content, please smash the like button, subscribe to the channel if you're new here. I'd really appreciate it. I'll do my best to keep you informed with timely content and solid ideas. Over in the show notes are places where you can subscribe to my content as well and get all this stuff in your inbox each and every day and midday as markets and trades develop. Also, check out the blog with a lot of information for aspiring traders at all levels. So have a good trading day. This has been Chris Buss with Traders Profit Compass. Talk to you next time.